anytime you have a tax provision, right? Something you're going to put on your tax return where you have asserted to the government, I did a certain act that has a certain tax consequence. If you can get a piece of advice from a tax lawyer or a accounting firm, primarily at more likely than not or better levels of confidence, you can probably get a tax insurance policy to say, yes, you've calculated your taxes the correct way. And then if the IRS disagrees with you on a good faith that you did it on a good faith basis, but the IRS just says you were wrong, then the tax insurance can stand in and pay the IRS on your behalf. So in the solar project space, what that often looks like is insuring sort of three buckets of risk. One is the structural risk of the actual tax strategy you use to monetize your tax credits. The next bucket of risk is qualification risk. That those tax credits are at the value that you've represented them at. And those are things like, did I build it with the right technology? Did I build it and place it into service on the right dates? Have I used the correct labor and apprenticeship in order to, meet the prevailing wage and apprenticeship rules? So qualification is a very big bucket. And then the third and final bucket for solar projects in particular, ITC projects, is recapture risk. So if that project is destroyed or taken out of service for some reason before day one of year 6, and the IRS, comes to hail back some of those credits, insurance can make you whole or your investor whole.